because I speak my mind a lot, right? I just say whatever comes to my mind. I have no filter. I was in the principal's office a lot. So I spent quite a bit of time there. I see patterns in everything. I've always been able to see patterns in everything. Kind of like, when Neo reads the Matrix, right? Those green things that are dropping down. That's me. I'm kind of looking at numbers and saying, is there a pattern here? Real estate is tiny compared to the overall impact of a black swan event on everything in the world, right? And what's interesting is in America, even World War II or World War I was not as disruptive as the coronavirus. Some syndicators have made the decision that they want to just sit by the side and watch this happen.
Right.
Usually those are the people that are the most, they've been around a long time, their payroll is met, they're not panicking, they're like, we're just going to sit here for 6 months and do nothing. All the explosion in the syndication industry really started in 2015, 2014, going to 2020 because of the Jobs Act and so on and so forth. When do you think that the real estate market in the United States bottomed out in the 2008 crisis? What quarter and what year? Pop quiz. As a country, and the country matters because the cap rates, remember, when you sell your property, there are two things that matter: your net operating income, which you have control over, and the cap rate, which you have no control over. That cap rate is based on the market sentiment. So the national market matters regardless of what you're doing in Arizona. For the last 10 years, people have been talking about a phrase called the retail apocalypse, right? The retail apocalypse. And every year, people in retail were saying, but it's not here. You were saying it last year. You were saying it 2 years ago. You were saying it 5 years ago. There's no retail apocalypse. There's portions of retail doing poorly and other portions doing well. And they were right. But that was in a thriving economy. We're going to diversify, or we're going to sell our retail assets when we are ready to sell. We're going to move that money into other areas. It's not going to be hotels, right? It's probably not going to be office, because if they're disenchanted with what happened in retail, they're going to be afraid of it happening in office if people don't go back. So where does that money go? I think it goes to multifamily. And it drives down our cap rates. I predict that 3 years from now, multifamily cap rates will be lower in the United States than they are today. Multifamily is now a privileged asset class compared to office, compared to retail, compared to hotels. That money's going to flow in. But secondly, whenever you cut interest rates, cap rates compress. Stay true to yourself and don't repeat shit that other people are telling you, because there's a lot of nonsense being repeated. I was in the principal's office a lot, so I spent quite a bit of time there.